Hi Matrix, welcome to the Dividend Online Academy channel. In this video we'll be looking at an ordinary share capital note question from the June 2024 Gauteng Province exam paper. In question 1.2.3 we are required to complete the ordinary share capital note. When we look at the ordinary share capital note in our answer book, we can see that some figures have already been filled in. Let's have a look at the additional information that's been given to us. We are told that authorized shares consist of 3 million shares. If we look at our note, we can see that this information has been disclosed, so no further action is required. On 1 March 2023, there were 1 million shares in issue. 1 March 2023 is the beginning of our financial year, so this information relates to the ordinary shares at the beginning of the year. So it relates to the number of shares that were in issue at the beginning of the year. When we look at the note, we can see that the number of ordinary shares in issue has been disclosed as 1 million shares, but the value has not been shown, which means that the examiner wants us to calculate the value ourselves. On 1 November 2023, the company repurchased 120,000 shares at 7.20 Rand each, which was 20% above the average share price. These shares do not qualify for final dividends. This information relates to the shares that were repurchased. The number of shares repurchased is given, but the value is not, so we will have to calculate that figure. 10% of unissued shares on 1 March 2023 were issued at 6.60 Rand per share on 22 February 2024. When we look at our ordinary share capital note in the answer book, we see that no entry has been entered for this issue of shares. So let's write an entry for the share issue. The entry will state shares issued at 6.60 Rand. Because the number and the value of the shares is not given, we will have to calculate both figures. A final dividend of 22 cents per share was declared on 29 February 2024. All shareholders on the shares registers qualify for the final dividend. This information relates to the dividend that was declared by the company, so it does not affect the ordinary share capital note. We just have to keep it in mind when we are calculating the dividends that were declared by the company and when we are determining the balances of the shareholders for dividends accounts in the balance sheet. The last line item in our ordinary share capital note is for shares at the end of the year. In other words, these are the shares that were in issue at the end of the year. When we look at the extract from the trial balance, we are told that the balance for ordinary share capital at the end of the year is 6,600,000 rands. This matches with what has been disclosed in the note. The examiner wants us to calculate this figure ourselves. So now that we know what we need to do, let's start from the beginning of the note. For ordinary shares at the beginning, can we calculate the value of the shares that were in issue at the beginning of the year? We only have the number of shares that were in issue at the beginning of the year. We haven't been given any information to allow us to calculate the value, so we don't have enough information to do so. It's very likely that this will be a balancing figure at the end. So for the moment, we skip the calculation. Moving on to the shares that were repurchased, can we find the book value of the shares that were repurchased by the company? The book value of the shares that were repurchased is calculated as follows. Number of shares repurchased multiplied by average share price. The number of shares that were repurchased is given as 120,000 shares. We are not given the average share price, but we are told that the repurchase price is 20% above the average share price. So that means that the repurchase price of 7.20 rand is 20% above the average share price. So that means that if the average share price is 100%, the repurchase price is 120%. Because we have both the percentages, we can calculate the average price by saying average price equals to repurchase price multiplied by average price percentage divided by repurchase price percentage. So basically, the formula is structured in the manner of what we are looking for over what we have. We are looking for the average price, we have the repurchase price. That gives us average price is equal to 7.20 rand multiplied by 100 divided by 120. When we calculate that, we get an average price figure of 6 rand. So now we can calculate the book value of the shares that were repurchased as 120,000 shares multiplied by the average price of 6 rand equals to 720,000 rands. And we must put that figure in brackets because we are repurchasing the shares. Therefore, our share capital is decreasing. Now let's move on to the share issue. How do we get the number of shares that were issued? We are told that 10% of the unissued shares on 1 March 2023 were issued at 6.60 rand per share. This means that the number of shares issued on 1 March 2023 is equal to 10% multiplied by the number of unissued shares. So what are unissued shares? Well, these are shares that have been authorized but are not yet issued by the company. How do we get this number of unissued shares? We know that the authorized shares consist of both the issued shares and the unissued shares. So we can represent that as the equation authorized shares is equal to issued shares plus unissued shares. So we can rearrange the formula to make the unissued shares the subject of the formula by saying unissued shares equals to authorized shares minus issued shares. The number of authorized shares is given to us as 3 million ordinary shares. The number of issued shares is given to us as 1 million ordinary shares. So 3 million ordinary shares minus 1 million ordinary shares gives us 2 million unissued ordinary shares. This means that the number of shares that were issued on 1 March 2023 is 10% multiplied by 2 million unissued shares. 10% multiplied by 2 million is equal to 200,000 ordinary shares. So 200,000 shares were issued on 1 March 2023. So now we can fill in that figure in our ordinary share capital note. Now we have to calculate the value of the shares that were issued. We are told that the shares were issued at R6.60 per share. So the book value of the shares is going to be 200,000 shares multiplied by R6.60. This gives us a book value of 1,320,000 rands. Now that we have the number of shares issued, we can calculate the number of ordinary shares that were in issue at the end of the financial year. Starting from the top, we say 1 million ordinary shares minus 120,000 shares that were repurchased plus 200,000 shares that were issued. This gives us a total of 1,080,000 shares that were in issue at the end of the year. We can now also solve for the book value of the shares that were in issue at the beginning of the year as a balancing figure. Because we are starting from the end, we are going to do the opposite of what you would normally do if you are starting from the top. So starting from the total at the end of 6,600,000 rands, we subtract 1,320,000 rands and we add 720,000 rands, and this gives us the book value of 6 million rands. So 6 million rands is the value of the shares that were in issue at the beginning of the year. So that's our completed ordinary share capital note. That's it, matrix. I hope you enjoyed this video. Please don't hesitate to contact us on WhatsApp or via email for more personalized support and videos. The earlier you call, the better. See the link in the description for the full video of question 1.2, which includes the fixed asset notes, the income statement, and the balance sheet. Good luck for the exams.